thanks for joining me, Lacey. You ready to get into some finance stuff of what's going on?
Absolutely. There's a lot going on in
Yeah,
the world of finance. I don't know. I want to say unfortunately, because some of it,
some of it is
I don't know, not
unfortunate.
my favorite.
Yeah, not
Yep.
the greatest. Like so, right now, we've been having a
Could we
really
have cued a Disney song for Unfortunate Souls? I feel like we lost an opportunity there.
there you go. Oh man. um. Anyways, so if you guys have been paying attention, the markets have been killing it for the last couple of years. The S&P 500, I think, was up like 30% this year so far. Last year it was around that. It was really high. So that's kind of all starting to cool off now. Today was a good day, but it was it's been kind of cooled down, and a lot of that's just because there's a lot of fear about what's going to happen to the economy starting next year under Donald Trump. So I just wanted to jump into this quick article here with Yahoo Finance. Hang on one second, and we will do this. All right. So this article is just it says souring S&P 500 profits outlook is a bad sign for the stock market rally. So the market's been way up. So here we go. As of this, it's up 0.3% today, 3.8% today. But if you go back and look at just year to date, it's been way up, right? But it's just in the last little bit here, it's taken a dive in the last few days. So Wall Street and analysts are quickly scaling back their forecast for corporate America's earning growth over the next year, which could pump the brakes on the blistering stock market rally before long. A lot of this comes out of a key indicator known as earnings revision momentum as a gauge of upward to downward changes to expected per share earnings over the next 12 months. It's just what do they think that the earnings are going to be for these businesses, and then they figure it out per share. But that's slumped into negative territory and is hovering near a second worst reading in the past year. Um, let's see. Corporate earnings have been a cornerstone of the stock market's rally for most of the past decade. Souring outlook on profit growth may dent a further S&P 500 advance after this year's run made valuations stretched and positioning elevated. The benchmark has been on track for its second consecutive year of gains, rising more than 20%, and is the most expensive, which is good if you have money in it, right? But the stocks are being set up for a reversal. The big issue heading into 2025 is whether the Fed will be able to continue easing policy and if earnings momentum will favor laggards outside of big tech. So a lot of this comes down to, does it look like earnings are going to keep going up? And if they do, and unemployment stays low and inflation stays low, then the Fed's going to keep cutting rates a little bit and level it out, which means things will be more affordable for like homes, cars, bigger purchases, which would be a huge rally to the boost of the earnings even more. So it's this whole balance where don't want it to get too hot and too cold. And right now it's been in a nice little Goldilocks zone for a long time, and coming out of the recession and massive inflation, we're kind of coming into what they call a soft landing, which is we're not going to have a recession. It's just going to cool a little bit, but everything's going to stay pretty level. Nobody's going to really notice the difference, right? And that was been kind of the goal. Well, that's kind of all on the table now. So here's the sort of accompanying article. So the Trump win has economists concerned U.S. economy will fail to make a soft landing. Um, so they talk about investors have grown increasingly confident in the U.S. economy will achieve the soft landing, but that's kind of all gone away. We're in a soft landing. Nobel Prize winning economist Joseph Stiglitz, but that ends January 20th because that's when Trump comes into the White House. Trump and his proposed policies have been viewed as potentially more inflationary due to the president-elect's campaign promises of high tariffs on imported goods, tax cuts for corporations, and curbs on immigration. Now you can read the rest of this article; it's actually pretty good, and they go through the expectations, the inflationary spiral that they expect from tariffs, the other big inflationary spiral that they get into in this article, which I think is the most important, is if they start deporting people, like massive deportations, even if they just start like televising like even their standard raids and stuff like that, and they try to make it real scary, you're going to see immigration, especially, come down. legal and
And
illegal.
that's going to be bad for your wallet. Let's be super clear. That is bad for your wallet.
It's going to be really expensive because what people forget is a lot of our food and the farming and the manufacturing and stuff in this country is done by immigrant workers because they're willing to take lower wages just for the chance to be in the country. So if
Right.
these people start getting deported or leaving or they're afraid to come, now you're going to have a situation where your cost of everything's going to go up because there's not going to be the labor there. So there's either going to be a supply issue or they're going to have to start paying a lot more for labor, which means your costs are going to go up.
Either way, it's bad for your wallet.
Yeah.
Either way, it means you're spending more money on things you used to spend less money on. And then saying, gee, why has everything gotten so much more expensive?
Right.
Well, that's the price you pay for being so freaked out about the border.
Right. And one or two scenarios is going to happen there. So prices start going up because of tariffs or especially if he curbs immigration. If prices start going up, one or two things are going to happen. Either companies are going to demand is going to keep up with it, and companies are going to go, oh well, if demand is keeping up, well we can jack the prices even higher, and they'll price gouge us like they did after the pandemic, and so inflation will get really out of control, like it did after the pandemic. Remember, it got to 9% for a while there, and that'll be bad. Or demand won't keep up. In which case, these companies, they'll lose earnings, which means they'll have to do more layoffs to save money, and it'll tank the stock market, which is probably the more likely scenario, is that demand won't keep up, and people will start cutting back. So it's kind of a spiral effect. It's not what you want to see, but that is kind of what we're looking at going forward. So just so everybody's going to get a heads up about that whole situation going on. But